All right, we've got the chairman of State Bank of India, Pradeep Chaudhary, joining us on the show to discuss exactly that, to talk about the credit policy and the outlook for the financial markets going forward. Mr. Chaudhary, let's start with what the RBI's mid-quarter policy review has said. Were you expecting the central bank to hold rates? How long before we see the RBI bringing down rates?
RBI has already given us a pleasant surprise by reducing the CRR by 75 basis points. I think RBI was expected to be careful, especially as the inflation numbers are still at about 7%. So to expect a rate cut would have been too much optimistic. And I frankly believe that more than rate cuts, it's CRR cuts which is more effective.
Now, Mr. Chaudhary, the RBI has said that the liquidity situation has begun improving after last Friday's CRR cut and that it will improve further in coming weeks. Most bankers, however, don't believe so. Which side would you be on?
I would also think that way because, for us the liquidity is plentiful and at least I would say comfortable. But we are still surprised that the 3-month CD rate in the interbank market is still at 11%. Though they have come down from 11.5 or 11.6, but a 3-month money market placement at 11 does indicate some tightness in the liquidity.
Mr. Chaudhary, some banks suggest that the cut in CRR may indeed enable banks to cut lending rates to some extent before the April policy. What's your take on that?
When the CRR was brought down by 50 basis points earlier, we had reduced the rates of our educational loans, and our asset liability committee is meeting tomorrow and will review the situation. But bringing down the rate, interest rates, particularly the headline base rate, requires a little more granular analysis. But for sure, most of the customers can expect some reduction in their interest rates for the loans.
So, Mr. Chaudhary, would it be fair for corporates or even home loan borrowers to start expecting some relief before April?
I'm not too sure about home loan because home loan is a 20-25 year long facility. So based on a momentary CRR cut, I don't know whether the banks will react on that. And today home loan rates on absolute terms are very low. For example, our home loan rate is 10.5, whereas the base rate is 10. I think the scope for reduction is higher in those cases where the interest rates are 14, 15, 16%. So they need to be brought down to more realistic or rational levels.
Mr. Chaudhary, the RBI has flagged upside risks to inflation as a big concern and even warned that inflationary risk will sort of influence both the timing and magnitude of future rate cuts. To the extent that inflation has, of course, reared its head once again, would you begin to doubt the likelihood of a rate cut even in April?
No, I think I would largely agree with RBI, and RBI has also said that there is suppressed inflation in fuel prices, which is very right. And secondly, RBI, while taking a stance or reviewing or readjusting the policy rates, cannot be oblivious of the realities. So if they feel that the spectre of inflation has not gone away, it is only appropriate for them to be a little more careful, as they have been.
Right now, Mr. Chaudhary, in view of the global situation remaining uncertain, do you believe financing the current account deficit is going to be a challenge? And should we expect that the rupee will come under pressure once again the way it did last November?
I think I would be more positive on that. And of course, financing a current account deficit of this magnitude is a challenge. Now, to address that, the current account deficit is largely coming from the trade deficit. So, one possible policy instrument that RBI has and perhaps has not been used to the optimum extent is the refinance for export credit. So refinance for export credit, which is currently at 15%, could be considered for increase to 50 or even 75%, because this does not add to the money supply, it only lowers the cost of credit to the exporter, which to my mind is very well deserved.